Hi team, this is AJ with Trading Trainer on the evening of Tuesday, September 28th with your Trading Trainer Daily Insights. What we're going to do here is take a look at our Trading Trainer Daily Picks Report generation tool. We're actually going to create for ourselves a pick list, and from this pick list we're going to find a candidate, do a full analysis on it, see if it deserves to be on our hot list. If it does, we're going to go ahead and craft follow-through rules, pick an option strategy, pre-select options, put together preliminary exit. Let's get right to it. Let's do price and description. Let's also do our pattern alteration. Let's look for things that are consolidating. And then let's do an options trading candidate. Let's see if we can find a stock to showcase here. We've got quite a few stocks that are setting up in order to be ready to break out. Anything that we have a breakout to basically means it's got a Bollinger Band with index of 3 or less and a bar counter of 20 or more. Now, I especially like it when potential breakouts are up in price, like Chicago Mercantile Exchange. And the reason why I like that is because when they do break, they tend to make our at the money or slightly in the money options become very deep in the money options and allow us to really capitalize on that directional move. So I'm immediately drawn to the Chicago Mercantile Exchange. I also like the fact that it's been stagnating for 30 days within the Bollinger Bands. So let's back this up a notch and let's go another level into deeper here. Let's look at volume and sector trends on this particular candidate and let's see what it's doing. So the Chicago Mercantile Exchange, as you can see here with its dark oranges and reds, has very low volume, and that's what we like. We like to see the volume being light. It's kind of the calm before the storm. It's what happens when things consolidate. Also, we like to see this. The Chicago Mercantile Exchange is neutral. The subsector, which is investment services, is neutral in both the short and the long duration. The sector, general financial, is neutral. Super sector is neutral in the short and the long duration. And industry, financial, is neutral in the short and the long duration. So let's go ahead and take a look at the chart. I'm going to go ahead and expand this to full screen so you can see what I'm doing here. Now the first thing I want to validate here with the chart is this thing really consolidating? So I can see that the Bollinger Band channel is getting tighter and tighter. I'm using a 20-day Bollinger Band. And I can see that the exponential moving averages, the 5, 10, and 20-day exponential moving averages, that's our butterfly pattern, are coming together to form a butterfly body. And you see what happens every time there's a butterfly body formed. You have a wings and wings, and when you have wings, it usually means a nice move in price. Take a look at this. We had a consolidation, and notice that the Bollinger Bands compressed. We also had a large candlestick count, and very shortly after we broke out down, and within half a month we would have made a fortune on an option trade, a leveraged option trade, a long put. So let's do it again. Let's go ahead and set up on this. Let's go ahead and pause to pull out a worksheet that will allow us to keep track of everything. So I'm going to be watching the Chicago Mercantile Exchange. Now, by the way, can you go ahead and set up on this with vertical spreads? Of course you can. I would probably go past here, and I would probably look at, say, 6 months, and I would probably pick something below the 240 range and maybe something, I don't know, maybe above this range here. I look for levels of support and resistance to be above. There's approximately, 2.5 weeks before expiration in October, so you could do vertical spreads that are time decay positions for sure. But I am actually going to go for the bigger win here and set up on long calls and long puts if we have a break. Can you set up, by the way, on both strategy or multiple option strategies on the same underlying stock? Of course you can. What we're going to feature here, of course, is actively catching the break. All right, so I'm going to get rid of my Bollinger Bands. I'm going to switch over to a line on close chart. I'm going to get rid of my exponential moving averages. because all I'm interested in is where am I consolidating right now, so I can set up clear lines as support and resistance. So I think we're talking somewhere around 260 up to 270. Let's see what happens if I put my open, high, low, close bars back. And I'm going to zoom back into 3 months here. So I think 260, that's a little higher than 270. That's 272. Do we need to be as low as 260 or can we be 261? I think we're going to pick 261. We want to get as tight a channel as possible. And I don't think that we've got any ascending or descending lines of support or resistance, so we'll go ahead and just go with horizontal. And so I'll jot these down. Resistance we set at 272, support we set at 261, and I like to calculate out what my average is and then calculate some thresholds. So 261 plus 272 divided by 2 gives me 266.50. I'm going to multiply that by my magical 0.006, which is 0.6%, and that gives me $1.60. So that's $1.60, and I'll put $1.60 here of what I call equity trader momentum. Now that 0.006 coefficient is for a half hour. That's the same thing as 6 5-minute bars. Last time I checked, 6 times 5 was 30, and 30 is half hour, so that's half hour, 6 5-minute bars. And we'll adjust this because if we're doing it on that faster rate, we'll check back every 30 minutes if we don't get it. We'll go ahead and add that in so that we can easily evaluate. So 273.60 and 259.40. And then now let's go ahead and pre-select some options here. So I'm going to come on back. And I'm going to ask you as well, I'm just setting up on this, I'd like you as well to go to quotes, and once the Google Finance screen comes up, go ahead and type in that ticker. So type in the Chicago Mercantile Exchange and use this tool that's part of Google Finance to understand what's coming up. We got October 28th, some earnings release. That could be when we have our breakouts. Sometimes earnings causes breakouts. You can look at all the news and where it was on the timeline. Very useful tool to find out what's going on. Become familiar with the CME. In the meantime, for us, I'm going to go to where it says options chain. I'll go ahead and pull back up our chart. I'll pull back up our notes. I'll pull back up the options chain window. Go ahead and put it right over here so I can see what I'm doing. I'll type in the CME. And I'll look at the options chain. Now I want one that's not going to be affected by volatility or time. So I'm going to go farther out in time, and I'm going to go deeper in the money. So November, December, it looks like December is the next quarterly option. Let's see if there's open interest in November. I want to see liquidity as well. We'll go ahead and scroll down here and just look at the November options, and then if we have to, we'll look at the December options. 273.60, 260, not enough open interest. 270, it's there, but $3.60 is not deep enough. Let's go to the December. All right, so here we are with our 270. 260, plenty of open interest, and that gives me 13. That's fine. And then let's look at the 270, plenty of open interest. Let's go with it. CME, December, 260 call, and over here we'll use the CME, December, 270 put. All right. I think that's all I've got for you. Please take care.